Good morning, everybody. Hello, and welcome back to another edition of your Bitcoin Economic Calendar. I'm Mauricio Di Bartolomeo, co-founder of Ledin, and as with every week, we bring you the news and analysis you need to start the week off right in Bitcoin. Today is Monday, October 25th, and we have a pretty jam-packed episode. This week, or last week, was a historical week for Bitcoin, reaching a new all-time high intra-week and having two ETFs approved in the United States. Today, we're going to review the performance of those two ETFs that were approved last week. And we're also going to be looking at the impact those ETFs are having on the CME futures contracts, which have tripled in open interest in the last month. And last but certainly not least, we're also going to be looking at futures and options expiration week, which is coming up. And we're going to look at how that could be impacting Bitcoin prices in the week ahead. So grab your coffees. It's going to be a great one. And before we get going with this week's analysis, we wanted to give a quick announcement, and that is that as of next week, the Bitcoin Economic Calendar newsletter, blogs, and video will start getting published on Tuesdays, moving from the current Monday publications to Tuesdays. So, hope to see you next Tuesday and catch you then. Now, starting as we usually do with Bitcoin, we see that last week, Bitcoin closed its first losing week in October. It's been rising for the prior 3 weeks, and last week we saw its first red candle, and it finished down 1.02% at $60,910. Now, it was still Bitcoin's second highest weekly close ever. If we see the closing level at 60,910, it's still above all of the other previous closes in Bitcoin's history. So again, second highest close ever after a 42% rally, which is still, quite impressive price action from Bitcoin. Now, while many did expect that the market could go down last week, remember we covered in last week's issue the buy the rumor, sell the news saying in Wall Street. The level of demand for the new Bitcoin ETF surprised pretty much everybody. And we're going to get into how that impacted markets. But I guess to get into some of the headlines that we saw, Forbes described the reception of the Bitcoin ETFs on Wall Street as nothing short of seismic, and we would agree. Last week, not one, but two Bitcoin ETFs were approved in the United States, and this is an article on your screen that came out of Vox, which essentially talks about the record-breaking performance that the first ETF had, and also we'll get into the second one actually did quite well as well. So just to get into the details for a second, the first fund to start trading was the ProShares Bitcoin ETF, and the ticker for that is BITO. And that fund came out with a bang on Tuesday, breaking the record for the fastest fund to reach $1 billion in assets. And that was highlighted by Eric Balchunas, ETF analyst at Bloomberg, and he writes record breaker BITO assets up to 1.1 billion after today, which was the second day of trading, making it the fastest ETF to get to $1 billion in 2 days, breaking gold's 18-year-old record, which got to $1 billion in assets in 3 days. So as Balchunas puts it, it's almost poetic that the previous ETF record of getting to $1 billion was held by the gold ETF, GLD, which again went to market 18 years ago. For context, this is the chart that shows the fastest growing ETFs in history. And mind you, this chart does not include the Bitcoin ETF yet, but it is impressive to see. If you look at the far left, this little blue vertical line is the speed at which gold got to $1 billion. As you can see, quite before every other fund. And even more impressive was that the Bitcoin fund or the Bitcoin ETF actually broke this. This line is even more vertical, which is very fascinating. Interestingly, to get into some of the market structures and dynamics of the funds itself, or the funds themselves, and how they are impacting market structure in Bitcoin. So the first Bitcoin futures ETF or Bitcoin futures based ETF has been so popular that it is nearing the limit, or basically it's nearing the limit of contracts that it can hold as underlying assets. The ProShares ETF can hold up to 2,000 front month contracts. That means the very next month to expiration, and a total of 4,000 contracts. We'll get into why that's important in a second, but this headline here was from Fortune magazine, which talks about essentially, is the ProShares Bitcoin ETF too popular, as it is very much or very close to reaching its limits. And we're going to break down how it got there. So the ETF has purchased 1,900 October contracts. Those expire this week, and we're going to get into that in a second. But that's almost at the limit of the front month contracts that it can hold. Remember, the limit is 2,000. It has also purchased 1,400 contracts in November. Now, this puts the fund near its $5,000 total contract limit. It's a $5,000 total contract limit. So Bloomberg reported that the CME is scheduled to increase the limit of front month contracts that the fund can hold to 4,000. And this starts with the November contracts, which is great news for the fund because now it can take on more capacity on that front month contract. Now, what happens once a fund reaches the limit of contracts that it can hold? Well, what happens is that what the book says is that it must start matching the new contributions, the new purchases of units in the fund. It needs to start matching those with dollar assets instead of Bitcoin futures contracts. This is, at this point, when the fund starts doing that, the unit prices of the fund start tracking the underlying price of Bitcoin less and less effectively or efficiently because there's less Bitcoin in there. It starts to have piling on cash, and that basically dilutes the move of the entire asset value of the fund. Now, there are a few ways out of this pickle, given that the BITO fund seems very close to reaching its limits with only 3 days of trading. Now, the options here would be to obviously increase the limit of contracts that an ETF can hold, and the other one would be to make other Bitcoin futures ETFs available. And here is where enter the Valkyr Bitcoin ETF, which started trading last Friday. With the ticker BTF. It was supposed to be BTFD, but they had to remove the D after some calls with regulators. And this fund started trading on Friday. Again, there was some coverage around this as well. A lot of the headlines were grabbed by that first fund, but the second one did do quite well, actually, and created a bunch of headlines. So the Valkyr ETF actually went to market on Friday, and it traded $80 million of units in its trading debut. This places Valkyr's release as the 15th most successful ETF launch of all time. And for context, there have been 3,500 ETF launches in total. So this basically shows us that there is quite a big appetite for demand or institutional demand for these funds. And it also shows us that the structural limits imposed on the first Bitcoin ETF by the SEC may give others or other funds, in addition to BITO, a chance to become relevant players in the Bitcoin ETF space. Now, the other consequence of this is that the launch of both of these funds has caused the Bitcoin CME futures contracts to reach record open interest. And remember, these are the only futures contracts that these ETFs can hold. So naturally, demand for these have been through the roof. This shows you the open interest of essentially futures contracts in the Chicago Mercantile Exchange. And it shows you that this has gone from 1.7 billion in September 30th, so less than 30 days ago, to $5.7 billion right now. Even 5.6 billion, 5.6, 5.7. That is more than triple in the course of a month. That is a very, very significant increase, particularly given that this is on the Chicago Mercantile Exchange. Now, what this has done is that it has also created an interesting trading opportunity as investors know that the ETF has to roll over its contracts, meaning it has to purchase contracts in a farther out maturity as the ones it holds get closer and closer to maturity. A perfect example of that will happen this week. As you know, the Bitcoin ProShares ETFs holds Bitcoin futures contracts as its underlying assets. Because it cannot hold these contracts until maturity and essentially settle, it must roll those contracts. and purchase longer dated ones. So currently it holds 1,900 October contracts and 1,400 December contracts. Sorry, let me just check that. I'm pretty sure it's 1,400 November contracts. Yeah, 1,400 November contracts. So 1,900 October, 1,400 November contracts. Exactly. So we know that as per the structural limits of the fund, we know that the contract has a 2,000 front month contract limit. And we know that basically Bitcoin futures contracts expire this week because they always expire on essentially the last Friday of every month. Now, this means that both Bitcoin ETFs have to load up on December contracts. And if we look at the implied interest rate on these December contracts versus others, and we can see that here, this is the annualized basis of the of futures contracts, essentially. And in here, we can basically see that the basis on the contracts that the funds have to buy are basically very, very high. So as you can see, the markets know that the funds have to load up on the November contracts, particularly given that they can now hold 4,000 of those contracts, being the front month. So the market has bid up the implied premium on these contracts. So basically, the ones that they know the fund has to buy are the ones that are for sale at the highest available price out of all others. No surprise here. And again, it just basically tapers down, and you'll see that the shape of this curve will start looking different, essentially, than most other curves, as investors just try to use the knowledge of that structural functioning of the fund to essentially get better off, or to make a trade that forces the fund to be the buyer and them to be the seller at a higher price. So again, this is fascinating because it shows you how the market is positioning, knowing that the fund has to act in a certain way. So again, just to kind of wrap this up, investors know that there is a forced buyer of the November and the December contracts. So they can essentially look to sell those December contracts at a very high price at the Chicago Mercantile Exchange, which again are the only contracts that these ETFs can buy. And then they will buy the same contract at the same maturity, at the same strike in another venue. What this does is that inevitably this drives up this demand to buy that contract in another venue, essentially drives up future prices in most venues. So again, options and futures expire this month. We're going to break that down a little bit deeper in our What's Ahead section later today. Moving over to the S&P 500, we see that the S&P made a fresh new all-time high last week, helped by a weaker US dollar and generally strong earnings overall, as we have been slowly entering earnings season in the equity markets. The S&P 500 finished higher by 1.43% at 4,538 points. Now, while the S&P has been rising, we are seeing decreasing volume on the way up. That's this little blue arrow that you see here. And this, combined with the fact that it closed just 3 points above its previous all-time high, they are not great technical signs going into the week. However, strong earnings could continue to propel the markets higher, even despite pressures from rising bond yields, and we'll break those down in a second as well. Looking at the Dow Jones also finished last week at a fresh new all-time high, up 1.08% at 35,567 points. 35,677 points. And the Nasdaq, although it didn't join the all-time high party, it did close 1.37% higher. Now, looking at all these markets finishing higher last week, let's start reading into what could be ahead potentially for this week and the following week. So as CNBC's Rick Santoli puts it, drama could be on the way as bond markets brace for the next week, or for the Fed meeting, which is happening next week. The next FOMC meeting starts next week. And that week, or that press conference or minutes, could bring with it the potential date of a tapering plan, like the actual potential date now for a tapering plan and stopping the sort of continuous punting that the Fed has been doing. Looking at the rates on these bonds, if we look at the 10-year bond, it was up last week by 5.01%, as we can see here, and that yield essentially finished the week at 1.65%, 1.66 essentially. Now, if we look at the yield on the 30-year note, that rose by just 1.95%. And that yield currently stands at essentially 2.01%. Now, the gap between the 10-year and the 30-year note shows something very interesting. And let's just show that difference for a second. First, let's do the 10-year, and then we're going to compare it to the 30-year. So as you can see here, even if we go back to September, there's a big gap on the interest rates basically how the 10-year and the 30-year rates have been moving. What this shows is that obviously the market is pricing a much higher interest rate / inflation on the 10-year note, and not as high of an interest rate or an inflation on the 30-year note. And what this tells us is that the market is essentially pricing in higher inflation in the short term, but still believes that inflation will be subdued in the long term. Interesting just to see how investors are positioning. Now, earnings season may also splash into Bitcoin this week, as we have a bunch of companies reporting in the US equity markets, but particularly the ones we're interested about from the Bitcoin side are McDonald's and Starbucks, which both report this week. These two companies have been accepting Bitcoin since it became legal tender in El Salvador, and it will be interesting to see if they address this in their earnings call. So, more details on this in our What's Ahead section. Moving over to gold, we see that gold actually had a strong week last week, finishing higher by 1.46% at $1,792 per ounce. And it was helped in part by a weaker US dollar. We see here that the dollar actually was down 37 base points last week after we've seen it sort of looks like it's forming a base and wants to continue going higher. But the more it can remain at these levels or come down, the better it'll be, I guess, for commodities such as gold. But going back to gold's price performance for the week, we see that although gold prices tend to be inversely correlated with the real return of US Treasury bonds, we are seeing gold rise in the face of rising US Treasury bond yields. We also know that the Fed is heavily involved in the US bond markets in order to keep those bond yields where it wants. So in other words, what the market could be saying is that US Treasury bond yields are not representative of market conditions, and that the real return of them is becoming even more negative, despite their headlines interest rates increasing or rising. What could be the answer to this? Well, as we know, the real return is the bond yield minus inflation. So the answer could be soaring inflation. To highlight some of those fears, this was an article from New York Times last week that essentially says that Fed Chair Jerome Powell says that supply chain pressures will likely last well into next year. Checking in on this inflation conversation, the word transitory is all but gone from the narrative. And now Fed officials are admitting that inflation could last well into 2022. In theory, gold should remain under pressure as bond yields continue to rise, assuming inflation stays the same. If inflation is perceived to rise faster than US bond yields, then investors should continue to seek shelter in gold. So we'll keep track of this dynamic going forward. Moving over to our analysis of DeFi, we see that the DeFi index came back to life last week, rising 9.33% for the week. And Ethereum also had a good week. It closed higher by 6.17% at $4,082. Now, while Ethereum did not reach a new all-time high last week, it did have its highest weekly close ever, It is the first time Ethereum has ever closed over $4,000 for the week. So again, positive there. It was also a relatively quiet week on the DeFi news flow front, as most of the focus was around the Bitcoin ETF. However, now that a Bitcoin futures ETF has been approved, an Ethereum futures ETF should just be a matter of time. Remember that Ethereum futures already trade on the CME, and the anticipation of this could drive ETH prices higher in the short or near term. Now, checking in on Compound, we see that the token price here continues to struggle. This is the price action from last week, and it continues to keep up with other crypto assets. Last week, it dropped by 83 base points and finished at $308. It is still down significantly since its $160 million bug was reported. We'll continue to track this in the following weeks. Moving over to our Bitcoin mining difficulty commentary, we saw that China made news once again last week as it looks to add the mining of Bitcoin and other cryptocurrencies into its blacklist of industrial activities. That is the article behind your screen right now. Now, as part of the process, the National Development and Reform Commission is asking for comments from the public until November 21st. Now, while some took this request for comments as a glimpse of hope that the Chinese government may be softening its policy, a further read or digging deeper into the details reveals that this request for commentary is really just part of the protocol when the CCCP wants to ban an industry altogether. So not holding our breath really there on potentially that to change. Now, on the difficulty front, just checking back into the mempool, not much has changed here. Last Monday's difficulty adjustment brought difficulty up by almost 1% at 20.08 terahashes. And we're still crawling our way back to our all-time high of 25 terahashes, but we have some ways to go. The mempool remains very, very quiet, and basically transaction costs and confirmation times are well in the normal range. Surprisingly, we did not see any congestion when Bitcoin reached the new all-time high last week, which is a testament to how effective and efficient the network is becoming. And as always, we leave you with what's ahead for the week. It's a big week for Bitcoin. For one, we may get to see whether McDonald's or Starbucks have decided to keep any of the Bitcoin they've been accepting as payment in El Salvador. Both McDonald's and Starbucks report this week, and we'll break those down in the daily breakdown shortly. Additionally, it's Bitcoin options and futures expiration week. Both types of contracts, futures and options, expire on October 29th. There are options contracts representing over 57,000 Bitcoins set to expire on that date. And there is also a record number of October contracts open interest in the Chicago Mercantile Exchange. This could introduce volatility in the markets as we approach Friday. We also wanted to spend a minute to break down how demand to hold a Bitcoin futures ETF unit turns into demand to purchase Bitcoin on the spot market. When an institution wants to buy a unit of the fund, the ETF operator can purchase the equivalent amount of futures contracts and sell the units to this investor. Now, the ETF fund operator purchases the futures contracts on the CME from a seller on the same Chicago Mercantile Exchange. This seller needs to hedge his or her risk. And to do this, it must purchase exposure to the underlying asset that it must deliver at maturity. Even though it is not delivering the physical asset, it has to deliver the exact same cash value. So the way to hedge that is to have exposure to that underlying asset. So to do this, the underlying investor that sold that contract for future Bitcoin must purchase spot Bitcoin in order to hedge. So that's in a simple way, or in a simplified way, that is how demand to hold a unit turns into demand to purchase Bitcoin in the spot market. Now, as always, we leave you with a wrap-up of a summary, essentially, of all economic data and earnings reports for the week ahead. And we start with Monday, today. 4:30 p.m. Eastern, Facebook reports earnings after market close. It may reveal further details about its stablecoin plans, which in turn could impact crypto market. Tomorrow, Tuesday, 9 a.m. Eastern, we get S&P Case-Shiller Home Price Index in the United States. Last month saw an increase of 19.7% in U.S. home prices. If this number continues to climb, it may spark some more heated public opinion debate around housing prices, and this could push politicians and the Fed to temper this market. Equity markets may interpret a higher number than 19% as a bad sign, and they could sell off on the news. 10 a.m. Eastern on Tuesday, we get new home sales in the U.S. The focus here again will be the pace of price appreciation. 2 key data points come out on Tuesday around real estate, so very likely that real estate could be a hot topic of conversation on Tuesday. Separately, Google, Alphabet Inc. also reports earnings after market close on Tuesday. Wednesday, we get at 8:30 a.m. Eastern, McDonald's earnings reports before the market opened. The company, or at least one of its franchisees, has been accepting Bitcoin payments in El Salvador since it became legal tender, and it will be interesting to see if this is addressed in the earnings call. Any plans announced by McDonald's could be a potential game changer for Bitcoin. So again, nothing is certain here, but they have been accepting Bitcoin, so there is a chance they may talk about it. On Thursday at 8:30 a.m. Eastern, we get US GDP growth for the third quarter, expectations for a 3% increase. However, the previous reading of GDP showed that it was growing by 6.7% in the second quarter. It would not be surprising to see the third quarter GDP number come out higher than 3%, which the markets could celebrate. 4:30 p.m. Eastern, Thursday, Amazon reports earnings after market close. That's a stock market darling, so many headlines will likely circulate around that. And at 4:30 p.m. Eastern, also on Thursday, we get Starbucks reporting earnings after market close. And similar to McDonald's, it has been accepting Bitcoin for payment in El Salvador since it became legal tender. However, different than McDonald's, Starbucks does not operate under a franchise model. So the decision to hold or sell Bitcoin must have been made at the headquarter corporate level. So we'll find out more, or if they address this on Thursday. And wrapping up on Friday, 8:30 a.m. Eastern, we get core inflation readings. Expectation is for month-over-month increase of 0.3%, which translates to annualized inflation of 3.6%. Now, this excludes food and energy costs, which are the sectors experiencing some of the highest price inflation. And the employment cost index, which is a less popular indicator in the United States, but it is interesting that it is expected to rise from 0.7% month-over-month increase last month to 0.9% month-over-month increase this month. This represents a 10.8% increase in employment costs for businesses. This is a very important potential omen of potential future consumer price inflation. So, it's a big week coming up. We'll keep you posted right here on the economic calendar and through our social media at Hodl with Ledin. Thank you for watching and for listening. If you enjoyed the show, if you learned something today, we welcome you to like the show, subscribe to our channel, share it with your friends. If you have any comments, feedback, or questions that you'd like us to address in the next issue, please drop it down in the comments section and we'll get back to you and look to include it in the next issue. And if you don't yet have a Ledin account, I welcome you to check out ledin.io and learn how you can start earning up to 6.1% on your first 2 Bitcoin and up to 9% on your USDC. We also have the best rates for Bitcoin-backed loans in case you need some cash and don't want to sell your stack. Thank you, everybody. Have a wonderful week and see you next time.